Michael Burry is here again with another dire warning. I guess by now you're familiar with Burry for his accurate economic and financial predictions. Well, Burry is once again sounding the alarm, but this time with warnings of the largest US bank going bankrupt and a low stock market in the coming months. So, what does this all mean for investors? Should you be concerned? In this video, we'll explore the details of Burry's warnings and provide insight into what it all means for the future of the stock market. So, you should stick around till the end as we dive deep. Do you remember the 2008 financial crisis that shook the world? Well, we're not going into details about that, but the time was a time of panic, desperation, and uncertainty, as people saw their hard-earned savings and investments vanish overnight. But what if I told you that Michael Burry predicted this crisis 15 months before it happened? And not only that, but he also saw the collapse of some of the most significant banks, including Silicon Valley Bank, Signature Bank, and First Republic Bank. Michael Burry placed his bets against the errors of banks, earning himself a handsome return of 30% on his short investment in the last 15 months. While the markets were down by 30% in that same period. But how did he know this? Well, the answer is simple. It seems that these banks were using clowns to manage their funds. Yep, you heard that right. Would you have invested trillions of dollars in a 0.5 annual coupon bond? Of course not. Who in their right mind would do that? Unfortunately, these banks did just that, and as a result, they got punished as bond prices collapsed due to rising interest rates. Now, the US banking industry is facing a crisis of epic proportions, with almost $750 billion in unrealized losses, and more banks are expected to go burst in the coming months. One cannot help but wonder, what will happen next? Well, one thing is certain, banks cannot afford to make any more blunders and expect to get away with it. The consequences are far too severe. Meanwhile, as the US banking industry continues to face an unprecedented crisis, there are varying opinions on what the future holds. While Bill Ackman and other prominent investors anticipate more banks to fail in the coming months, one voice stands out with a different perspective, and that's the voice of Michael Burry. Michael Burry believes that the spreading crisis following the collapse of Silicon Valley Bank would resolve very quickly. I'm not seeing any true danger here. According to Burry, regulators' recent move to backstop regional banks should be enough to stabilize the financial market, as he draws parallels with history, where he cited the example of the Panic of 1907, which was resolved within 3 weeks after JP Morgan and other financiers pooled money to bail out the banking system. However, Michael Burry is of the opinion that a bigger crisis is brewing that no one is foreseeing at the moment, but the consequences of that crisis will be far-reaching. This raises many questions and leaves us wondering, is Michael Burry's prediction of a bigger crisis on the horizon just the beginning of a much darker and more uncertain financial future? Well, I'd like you to pay close attention for the next few minutes if you haven't been doing that. It's as though Michael is pointing our attention to something that no one is foreseeing. The legendary investor tweeted on March 9th, a day before the regulator shut down the SVB. "It is possible today we found our Enron." He also tweeted, "Next, we find our WorldCom on March 10th. Patience." Just in case you're not aware, the Enron and WorldCom collapse occurred within months apart from each other in 2001 and 2002, which affected the global markets. For Michael Burry, Silicon Valley Bank is today's Enron. Burry's comparison of SVB to Enron is quite interesting because both companies suffered from accounting scandals that ultimately led to their downfall. And SVB's loss due to the drop in the value of its existing bonds may be seen as a red flag, just as Enron's announcements of its first quarterly net loss was the beginning of the end. And Burry believes that another major bank will follow SVB's fate and become the WorldCom of our time, although he didn't give any clue as to which bank he was referring to. Meanwhile, Michael Burry isn't the only legendary investor to believe that another major bank will follow in the footsteps of SVB. Robert Kiyosaki also shares similar beliefs. Robert Kiyosaki, the author of the best-selling personal finance book, Rich Dad, Poor Dad, has warned that a third leader will likely follow in the path of the SVB collapse. He stressed that the situation would positively impact precious metals in a tweet on March 10th. Kiyosaki's projection corresponds with an earlier prediction that the Lehman Brothers would go bankrupt in 2008.
Is the banking sector a good place to look right now, given the problems we've seen at some of the regional banks in the United States?
Taking it all in here, a lot has gone on, obviously, in the last week. A week ago, no one even knew, or some people knew this might happen, but this kind of new. So it's hard to really buy or sell securities, or stocks that is, not knowing how the plan's going to be unveiled, and we're getting a little bit more clarity on that. The problem here, though, is really sifting through. It's not just about agency securities and treasuries. There's commercial loans that are on banks' balance sheets, commercial real estate, right, C&I loans, et cetera, that are still going to be a problem. And I think now's the time to really dig in to these banks.
Moses, like Steve Eisman, doesn't see anything.
Now, besides Burry's warning of a bigger crisis looming, the legendary investor is also predicting a low stock market in the coming months. Over the past years, Burry has taken a bearish stance on markets and has repeatedly warned investors to prepare for a looming crash in stock prices. In January, he warned that the state of the year rally of a change in monetary policy, or a cut in rates after cycles of increases, was likely to last with a one-word tweet: sell. The stock market is in a precarious position, and we should brace ourselves for what's to come. The S&P 500 has broken below critical support levels and may hit a bear market bottom of 3,100 to 2,900 SPX due to a weakening economy and tight economic conditions. Corporate profits are expected to decrease in many sectors, and market-moving stocks remain expensive. The SPX could retest the 3,500 level, or move lower to its base case bear market bottom.
In terms of, though, guaranteeing all deposits, does that make anything safer in your view? If this became the norm, if this became the rule, that there is a backstop for everything, does that make the sector any more attractive in your view?
No, I think that should scare people, the fact that the regulators think that they need to go out and actually do that. And so now I think what we're going to see is the banks that maybe come to this window and use this program.
Investors have more than just technical analysis to worry about these days, and that's because inflation readings are also skyrocketing, with the recent Consumer Price Index (CPI) hitting a record 9.3%, a level not seen in over 4 decades. And to make matters worse, the latest readings have come in even higher than anticipated, implying that the Federal Reserve will have to keep rates elevated for longer than the market may like. This could lead to a worsening economic environment, a declining labor market, and potentially a full-blown recession. Adding to the economic uncertainty, critical inflation gauges such as PCE suggest that inflation will remain a significant challenge. On top of this, manufacturing, housing, GDP, ISM, and other essential economic indicators are underperforming expectations, painting a bleak picture for the stock market. With all that in mind, it's crucial for you to stay informed, so don't miss our next video about Michael Burry's biggest inflation warning for 2023. Thanks for watching, and see you in the next video.